So auto insurance feels confusing, but not because it's complicated. It's just that few ever explain it in plain language. I've dealt with this from both sides, with my own policies and as a licensed agent. And I don't sell insurance anymore. I just help explain it. So this is the 5-minute essentials. And I'm using my own policy as a guide to show you the map. No advice on what limits you should buy, just enough to be dangerous and savvy, so you feel confident the next time you look at your premium. So let's start with the foundation, liability. Liability pays for damage or injuries you cause to other people, not you and not your car. You'll usually see it as 3 numbers like 100/300/100. A lot of times agents will just say 100, 300, 100. When I bought my first policy, I remember my agent saying, "You want good coverage? I'd go with 100, 300, 100. And I said, great, but I had no clue what that meant until I joined the insurance industry. So that first number is your bodily injury per person. The second is bodily injury per accident. And the third is property damage. That third number matters more than people realize because cars are expensive now. And in a multi-car accident, low limits get used up fast. On my own policy, increasing property damage to $500,000 cost me less than $1 for the entire term. Not $1 a month, $1 total for the whole 6-month term. So it's often the cheapest part of the policy to beef up. Next is your collision. This covers your car hitting another vehicle or even an object, regardless of fault. Even if you mess up and hit a pole, this is what fixes your car. So you choose a deductible, say for example, $1,000. You pay that first, insurance covers the rest. Now, comprehensive often will say other than collision. So it handles your acts of God and the weird stuff, theft, vandalism, hail, or hitting an animal. Same deal, you pay your deductible first, insurance covers the rest. And quick insider tip here, check your glass coverage. In some states, you can have a $0 deductible for windshields. Uninsured or underinsured motorists is one of the most misunderstood sections, but it's simple. It protects you if you're hit by someone who carried no insurance at all, or they have it, but it's not enough to pay your bills. Then you have your medical payments or personal injury protection, oftentimes called PIP. So this varies by state, but it's there to handle medical bills after an accident. Now, the cool thing, in some states, PIP doesn't just cover doctors. It even covers a portion of your lost wages if you can't work. So it's like the human part of your car policy. Finally, we've got the extras, roadside assistance and rental car coverage. Rental car coverage, of course, covers the cost of renting a replacement vehicle when you're in an accident. And roadside assistance covers your tows, your flats, jump starts, etc. in vehicles you have it added to. So these are usually inexpensive, but check to see if you already have it. Maybe you have a AAA membership. Maybe you have it on your cell phone plan, or maybe you have a new car warranty that includes it. So if you have that, that's something to think about. So the reason we talk about this for 5 minutes isn't to obsess over insurance. It's to make better money decisions. If this clarity helps you be a savvier shopper or spot a double payment or choose more efficient limits that save you even $100 a year, and all you do is invest that at, say, for example, 8% over time, that small win compounds into real wealth. Whether it goes into an ETF, a high-yield savings account, or a weekend trip, that's your choice. That knowledge just gives you the options.